Okay, so this is like the eternal debate, right? Real estate versus stocks, and everyone's got an opinion. Your uncle's like, you gotta buy property, man. Real estate is the only way. And then your friend's like, nah, bro, stocks are way better. More liquid, lower barrier to entry. And honestly, they're both right, and they're both wrong. But here's what's interesting. When you actually look at where rich people put their money, there's a clear pattern, and it's not always what you'd expect. So I'm gonna break down real estate versus stocks, show you the actual pros and cons of each, and then show you where the wealthy actually put their money. Alright, so real estate. Why do people love it? First, leverage. You can put down like 20% and control 100% of the asset. With stocks, your money is your money. With real estate, you can borrow most of it. Second, tax benefits. Mortgage interest is tax deductible. Depreciation is tax deductible. You can do a 1031 exchange to avoid taxes. The government basically incentivizes real estate investing. Third, it's tangible. You can touch it. You can drive by it. It feels real. There's something psychological about owning actual property. Fourth, cash flow. You rent it out. People pay you every month. That's recurring income. Fifth, you're forced to save. You have to pay the mortgage. So whether you like it or not, you're building equity. These are all real benefits. Real estate is legitimately good. But here's the downsides. First, illiquidity. Your money is trapped. If you need cash, you can't just sell in a day. It takes weeks or months. You're stuck. Second, upfront capital. You need a down payment. Usually at least $20,000, $50,000 minimum for most people. That's a barrier. Third, work. You gotta manage tenants, deal with repairs, handle taxes. It's like having a job on top of your job. Fourth, concentration risk. That money is all in one place, one property. If the neighborhood gets bad, or there's a natural disaster, or the housing market crashes, that's your entire investment concentrated in one spot. Fifth, leverage works both ways. Sure, you can borrow money, but if things go wrong, you're on the hook, you're liable. And sixth, the returns aren't always as good as people think. If you factor in your time, your maintenance costs, your taxes, sometimes the actual return is like 6–7%. Not that impressive. Now stocks. Why do people like stocks? First, liquidity. You can sell in seconds. Your money is accessible. You're not trapped. Second, low barrier to entry. You can start with $100, even $50. No down payment needed. Third, diversification. With that same money, you can own pieces of hundreds of companies. You're not concentrated in one asset. Fourth, passive income too. Dividends. Some companies pay you just for owning them. Fifth, simplicity. You buy, you hold, you don't have to do anything. No tenants, no repairs, no management. Sixth, historically, stocks return about 10% a year. Real estate is more like 6–7. Stocks have historically beaten real estate. And seventh, time. You're not spending hours dealing with tenants or contractors. You're just investing. But stocks have downsides too. First, no leverage. Your money is your money. You're not controlling a bigger asset. Second, volatility. The price goes up and down, sometimes way down. Psychologically, it's harder. Third, no tax advantages. Unlike real estate, there's not all these tax benefits built in. Fourth, it feels less real. You're just looking at a number on a screen. Some people don't like that. Fifth, emotions. People panic sell. They chase pumps. With real estate, you're stuck holding no matter what. With stocks, you can make emotional decisions. And sixth, no forced savings. If you want to sell, you can, so it requires more discipline. Okay, so here's the interesting part. Where do actually rich people put money? The ultra-wealthy, like billionaires, they do both. They have real estate portfolios. They have stock portfolios. It's diversified. But if I had to pick what they emphasize more, it's stocks and businesses. Why? Because that's where the real wealth is built. Stocks scale, businesses scale. Real estate is good for like solid middle-class wealth. Nice house, rental property, build equity. That's real and it works. But to get actually wealthy, actually rich, you usually need stocks or a business, because those can 10x. A rental property may be 2x or 3x over 20 years. A stock can 10x in 5 years. Jeff Bezos isn't rich because of real estate. He's rich because of Amazon stock. Mark Zuckerberg, Facebook stock. Warren Buffett, stock portfolio. That said, most wealthy people still own real estate. It's part of a balanced approach, but it's not usually the main driver of wealth. So what's the real answer? Which is better? It's not either or, it's both. For building wealth faster, stocks probably win. Better returns, more liquidity, less work. For stability and peace of mind, real estate is good. Tangible, recurring income, forced savings. The real secret is diversification. Some real estate, some stocks, some bonds, some cash. you're not putting all eggs in one basket. And honestly, the biggest factor is just getting started. Most people do neither. They sit in cash earning 0% and wonder why they're not wealthy. If you pick either stocks or real estate and actually commit, you'll be ahead of 90% of people. Just start. This is the stuff that actually makes people rich. Not get rich quick, not hype, just actual asset building strategies. And the more you understand about where wealth actually comes from, the better decisions you make. So if you want to learn about real strategies for building wealth, subscribe, turn on notifications, because I'm going to keep breaking down the stuff that actually works. Rich people didn't get rich by accident. They followed principles. And those principles are learnable. So yeah, subscribe, and let's build wealth together.